Hi, my name is Ricky Knight from Insurance Sales Pro, and welcome to this very short video all about the death of the mortgage industry. Let's face it, the industry right now is flat on its face and has been now for a few years. And all we've got to do is just look at some of the facts to understand the state of the industry right now. In 2007, gross mortgage lending in the UK was averaging over £30 billion each and every month. Now it's averaging about 12 billion. So that's a drop by almost 2/3 in the space of only a few years. In direct proportion, the number of advisors that have left the industry is considerable as well, because there were over 32,000 back in 2007. Now about 10,000. 10,000 mortgage advisors, that's all that's left in the industry. And then you look at the mortgage lenders themselves. They've had to make huge cuts, huge staff cuts, just to sort of cut their own overheads, their own fixed costs. And the impact on their service then has been dramatic. The relationships are no longer there that we used to have with mortgage lenders a few years ago. And they don't seem to care about that. That's the impression that we sometimes get. That can be very difficult to deal with. Dual pricing, still a major problem. And you're having to sort of rethink about how you do things. I know mortgage advisors that just from a TCF point of view are having to introduce fees so that they can still point the client in the right direction as far as a deal that they can get by going direct, so they're still offering the right advice. But if they didn't charge a fee, then they wouldn't earn any money at all for that quality of service. It's a very difficult climate right now. I mean, how does this affect you? It must impact you. You must be thinking about how you're going to move forward in this industry right now. I certainly did. I was forced into it a few years ago. I mean, in 2006, I was running what was at the time a very successful mortgage and IFA brokerage. And I mean, we had over 30 staff members. Life was pretty good. We were turning over just under £2 million each year. We had a 12% profit margin. And then there was this overnight crash, and the amount of business that we were bringing in, certainly within the space of only a few short months, it pretty much halved. And so we were on the front foot. We were sort of quickly making waves of redundancies to sort of try and deal with that, but then that had a direct impact on how we were managing to service our debt. Because the mistake that we had made is that we'd borrowed quite aggressively to fund our growth in the previous few years. So we were left in a very, very difficult situation. And to cut a long story short, I ended up leaving. The company then went into liquidation, and we were one of the so-called victims of the credit crunch. And me looking back at my situation then, as I say, this forced me into a different way of thinking. I mean, I'd literally lost everything. I'd lost the business, I'd lost my nice car, I had to move out of my nice house and move my family, my young family. My wife was pregnant with our second child, and we had to go and move in with her mum and dad, my in-laws. For us, I was left literally with no business, no car, no job, no nothing. And it's quite interesting what that sort of situation does to you. And as I say, it forced me into rethinking about the industry that we're in, and taking this step back and looking at the different trends, how customers were wanting to receive advice about mortgages, insurance, and all that sort of stuff. And I remember it very clearly because it was in I think it's the December of 2008, this would have been, just after my daughter had been born, in fact. And it was freezing cold. I was actually trying to work in the garage, and I had a little portable heater, little portable radiator there. And I was sketching down how I thought the industry, how I could make a business that adapted to the new trends that were happening within our industry and everywhere else, in fact, embracing the internet. And I remember sketching down a model that I thought, I was adamant, I mean, I'd researched this and I really did think it had some legs and I thought it could work ever so well. And I sketched this model down, and it's the model that I'm going to go through with you in just a second. It's the model behind me. And I ended up implementing this model very quickly, and within 6 weeks of my new business, I set up a new business in the early part of 2009. Within 6 weeks I was banking, not just writing, but money in the bank of over £10,000 a month. Within the first full year then of the company trading, I turned over £300,000, and on the back of that laid the foundations then to grow the company even more, just duplicating the model that I'm going to share with you in just a second, and then more recently just selling that company. So it's been a phenomenal journey over the course of the last 2.5 years to this point where I am now, where I can now feel privileged to be able to share this with others. Before I do just show you exactly how it works, I think it's important to just recognise as well that this doesn't involve you having to go out and take more exams and learn loads of new skills. This is about utilising the skills that as a mortgage broker you already have. You've already got this in your locker. This is just about focusing it and channeling it in a different way. Don't get me wrong, there are still skills to learn, and again I can share that with you, but it's not rocket science, this isn't. I'm talking about a traditional sales funnel. That's the framework of this model, okay? It's about feeding the top of the funnel with quality new clients. But quality new clients, not just any old client, specifically quality new clients focused on life insurance. Alright? So that's how it starts. And these quality life insurance clients, they come on board. And don't get me wrong, you know, if you're any good at your job, I would imagine that you also specialise in other insurances. When I say life insurance, I don't just mean that's it, life insurance. You know, life insurance, critical illness insurance, income protection, those sort of insurances that, let's face it, most people need. Not necessarily want right now, but most people need. There are all these other services that as advisors we can either offer or we can outsource others to do as well, other specialists to do as well. Okay, so when we're talking about the other services, home insurance, wills, mortgages, investments, pensions, business protection, savings, conveyancing, all stuff that's related under this umbrella of what we do, okay? And this is such an important message to grasp right now, because once I understood this, I read about it a hell of a lot, but once I understood it, embraced it, and then implemented it into my business, it made so much difference to the way that I thought and worked. Leverage. Okay, so what I'm talking about here is you focus and you specialise on the insurance plus one, maybe plus two other products. So it might be the life insurance, stroke critical illness insurance, plus home insurance, because most people need it, they've got it already. You know, they could do with sort of trying to save some money on it or understanding how it works a little bit better. And then, you know, maybe the mortgages as well. All right. Or maybe wills, something like that. But, you know, just focus on 2 or 3 that you are considered a specialist in. Then what you do is you offer a quality service to the point where you're almost sort of trying to offer this one-stop shop, and you are the point of contact, you get the quality referrals, and then you pass any of these other referrals on to other specialists that you know, that you trust, that you've got a very good working relationship with. That's the power of leverage, because you've then got other people doing the work for you All you've done is just handed over the client. In fact, you haven't handed over the client, you've handed over a lead. They're still your client. But you've got someone else, say on a pension transfer, they're doing all the work. That can take months to go through. They're doing all the work. All you've done is handed them over. They're still your client, you still maintain contact with them. Imagine, if you will, a GP, and you go and see a GP, and it turns out that you need to have surgery. Now, the GP isn't going to do that surgery for you, nor would you expect them to do the surgery for you. You want to go and see a specialist. And that's what we're talking about here, handing it over to other specialists. By maintaining this regular contact with your clients, offering them other services, offering them quality value along the way as well, it's going to lead to then quality referrals. That's what's coming out the bottom. Now, not everyone's going to take all of these, and so you can see as the funnel comes down, there's going to be less and less people taking more and more products, but there will be some that will want to take everything from you. They'll trust you completely. And they don't have to take all these products to then get quality referrals. You might get quality referrals right up here. But the important thing is that you understand how it works. You're offering quality service, you're offering value, you're asking for referrals in the right way, and I'll come on to that in another video. But it leads on to quality referrals. And if you can imagine, if you will, that all of a sudden, if you're embracing this, and what you're doing is you're offering more, but you're making considerably more from each client as well, rather than just focus on this little bit at the top. They're more bought into it to you. It gets to the point where they even start coming to you before you've even offered them other services. You know, I've had it where, Ricky, do you offer pensions before I've even introduced a pension campaign to them? And by doing all of this, you're increasing the LVC, the lifetime value of each and every client. I see so many in this industry that only focus on this very top of each funnel, and they get them in and then they forget about their clients. Mortgages, for example, get a mortgage client on board, and then 2 years later they forget about them for 2 years, contact them again when the remortgage is due. Is that client going to feel loved? No, not really. The lifetime value of each and every client, by introducing this model, the average case size for my particular business that I've recently sold, it increased from about £800, which is what it would be, the average case size of an insurance client, to over £5,000 when you take into account all of the other services, the other products that they take on board, and the quality referrals that leads on to, and the money that you make from them as well. This model is proven, it's tested, and it works, and this is how to start making serious money again in this industry. Now, I'm coming towards the end of the video now. One of the first questions when I introduce this to people, this model, other advisors, that they come back to me with is, okay, that's fine, but how? How does this bit start at the top? How do I get these quality insurance clients on board quickly, and so I start earning money quickly? The volume, you know, for me to be banking 10,000 within 6 weeks, I'm talking about high volume in on a daily basis. And you know what? It's really easy, because there's another concept that I want to introduce you to, and that is zero-based prospecting. And zero-based prospecting is what I'm going to share with you in the next video. Prospecting can be a nightmare in our industry, trying to constantly find new clients. Zero-based prospecting eradicates all of those problems and starts feeding the top of this funnel. I hope you found that useful, and I genuinely look forward to sharing with you the concept of zero-based prospecting in the next video. In just a few days I'll send it to you. So that's it for now. Until then, Thank you and goodbye.